Hey, what's going on everyone? It's Griffin here and I hope you're having a fantastic day as always. Now, for today's video, I've recently had quite a few viewers requesting that I speak more about some new and upcoming IPOs, that is initial public offering for those who may not be familiar with this term, specifically though the IPO of the company Airbnb, which is set to go public sometime during the month of December. An IPO is essentially the process where a private company is going to transition over into being a publicly traded company where they issue out shares of their company in question that can then be purchased and traded in the open market. Obviously, most people watching this video right now are already aware of what a public company is and what an IPO is, but this IPO process is really important for companies to raise capital in order to fund business operations and future expansion of the company. So in any of my previous content when I've spoken about companies issuing out shares in order to raise capital, it's essentially the same thing as the IPO. However, an IPO is that first time that a company is transitioning from being private to a public company and thus issuing out shares to the public in order to raise that capital. So that's pretty much it for the quick explanation of what an IPO is. Now in today's video, well, as mentioned previously, I've had quite a few viewers requesting that I share my thoughts and do somewhat of an analysis of the upcoming IPO for Airbnb, which is a company that operates directly in the middle of the travel industry, which has been hit extremely hard over the course of the 2020 pandemic. Now, as a long-term customer of Airbnb myself, when I saw that the company was going public, this obviously piqued my interest because I wanted to know more about what the company had to offer, what their financials looked like historically, which we now have access to for the first time, and from that, determine whether or not I would be investing in the company. So without further ado, let's get right into it. And as always, if you enjoyed the content of today's video, take a second to smash the like button. It really helps the channel out, and also consider subscribing and hitting the bell button to be notified whenever I release new and upcoming investing content. Alright, so first and foremost, let's actually speak about what Airbnb does as a company, even though most of you are probably familiar with their core product offering. So Airbnb is an online marketplace that aims to facilitate the interaction between hosts that can list their properties and venues, and then travelers that are looking for interesting places to stay. I'm willing to bet that most of you have used Airbnb at least once in the past when traveling. I certainly have multiple times, and in most instances, the overall experience has always been great. With that said, Airbnb's revenue model is essentially charging a service fee to both the host as well as the guest as a percentage of the price of the booking. Essentially, they've created a platform where millions of hosts and guests can share their properties and experiences, and then Airbnb gets to take a cut from every transaction. It's a pretty sweet business model and has now turned into a go-to platform for travelers and property hosts. But from an investment standpoint, before I choose to invest or not, obviously I did some further digging into the company's business highlights as well as financials so that I could get a better picture of what's going on within this company and whether or not it would be a good opportunity for an investment right out the gate during their IPO process. Now at this point, it is somewhat uncertain as to the exact date of when Airbnb will be going public. However, as of right now, rumors are saying that it's going to be around mid-December, and the company is looking to raise around $30 billion of capital. And compared to other tech companies that have IPO'd in recent years or during the course of 2020, this actually isn't that significant of a capital raise during the IPO. Alright, so moving on into the analysis of Airbnb's prospectus though, when you first open up the document, you're going to be presented with roughly 50 pages worth of risks and assessments about Airbnb's business moving forward, which unfortunately there are some pretty severe ones that I'd like to highlight right out the gate here for Airbnb. One of the first risks that we're presented with is that the pandemic and the impact of actions to mitigate the pandemic have materially adversely impacted and will continue to impact our business, results of operations, and financial positions. So I mean, straight off the bat in the prospectus, Airbnb is mentioning that the overall pandemic has severely impacted their business model, which isn't all that much of a surprise considering the fact that Airbnb operates in the travel industry. Now, I was actually in Montreal this past weekend and I did use an Airbnb. The service was great, everything worked as normal, but in terms of actual travel in Montreal, there was absolutely no one. It was like a ghost town, almost eerie really, but obviously the pandemic is continuing to severely impact the restaurant, airline, and hotel industries. The issue here is that we're nowhere near out of the woods in terms of the pandemic. Even though, yes, there have been talks of a vaccine being developed that should eventually be released, well, even at that, numbers for the virus are rising and we're far from full recovery, let alone the psychological impact that this situation has had on many people against traveling pretty much altogether. Furthermore, in parallel to this, the company did have to lay off around 1,800 employees back in May at the beginning of this overall pandemic situation, which is never a good sign that you want to see for a company that's growing and prospering, even though this was most likely the smart thing for Airbnb to do by cutting down its operating expenses, which allows the company to retain a higher percentage of their revenues. Moving on down the risk section of the prospectus, the company has also announced that they have incurred net losses in each year since inception and that they may not be able to achieve profitability. Now, here's the thing though about this risk as of right now. It is completely normal for most growth companies to not be profitable for the first several years of operations, as they're reinvesting so much of their earnings back into the growth of their operations by expanding into new markets, releasing new product lines, research and development, etc., all of which with the end goal of significantly growing their revenues year over year. I'll throw up a couple examples right here on the screen. As you can see, these are all growth companies that are significantly increasing their top line year over year while still being unprofitable. But in the case of Airbnb, as we're going to be seeing later on when looking at their income statement, yes, they are increasing their top line on a quantitative basis year over year, but from a relative percentage increase year over year, the company is actually slowing down their revenue growth, even regardless of the pandemic situation, which really started impacting their revenues only as of 2019 near the end and over the course of 2020. So this is one of the last things that you want to see from a growth company. In fact, the company even expresses further down the risk section the following statement. So our revenue growth rate has slowed and we expect it to continue to slow in the future. It's that last part of the sentence that kind of has me worried as a potential investor. This isn't really something that I like to see when a company's outlook is that their revenue growth is going to continue slowing down, especially during an IPO process when the company is looking to raise significant capital in order to continue accelerating their growth by having more liquidity that they can reinvest back into the expansion and exponential growth of their top line. If a company isn't growing, well, essentially it's contracting as competition becomes fiercer, customer growth isn't expanding as much, and in the case of Airbnb, they also face tighter regulations around short-term rentals. Now, with that said, this is a company that has been growing their top line quite consistently over the past decade when looking at their income statement figures. The questions really are A, how quickly will we be able to roll out a vaccine and get that implemented, since that's really the mechanism of defense and further prevention we've got for controlling the speed and growth of virus numbers, and then B, how quickly will people on a wide scale 2019 level start traveling again to bring those revenue numbers back up into the black and even showing further growth and expansion. Alright, so honestly, I could go on and on about the risks that were outlined in the prospectus. It's a 350-page document, but the gist of the opening statements are that there's definitely a lot of competition right now, and the company is facing some severe challenges in terms of growth moving forward. So it's safe to say here that the company does have years of legwork ahead of it in order to gain back the momentum that it was experiencing over the course of 2019. With that said though, all companies going public do have to state risks associated with their business within their prospectus, and it's not all bad for Airbnb. First of all, from a business perspective, Airbnb does have a first mover advantage in terms of a short-term rental platform, and for this reason, not only are they the largest short-term property sharing platform, but they also have strong brand recognition pretty much worldwide at this point. Airbnb has sort of become the Uber of the short-term rental space, where in the case of Uber, sure, there's Ride as well as Lyft as competition, but most people are more familiar with Uber. For this reason, the company does also have an extensive community of hosts that list their properties on the platform at more than 4 million hosts worldwide, which is quite a bit, and this translates over to around 5.6 million active listings as of September 2020. For some perspective, that's more than Marriott, Hilton, Intercontinental, Hyatt, and Wyndham combined. But before someone roasts me in the comments, obviously this is significantly easier to accomplish for Airbnb, having more for listings because, well, they don't actually own any of the property. Now, another element though that I do think Airbnb really has going for them is customer loyalty and repeat guests. So personally, I have not stayed in a hotel in years, and I think the last time I did was because I was traveling with my family and they had ended up booking a hotel. But myself personally, when I'm traveling, I always go to Airbnb, and I've probably done so over a dozen times. And this is apparent across Airbnb's user base, with 69% of revenue generated in 2019 from repeat guests, up 3% compared to 2018 levels. This to me is pretty telling of the engaged community that Airbnb has created, where there is a high likelihood that customers will become repeat customers once they try the platform for at least the first time. And this goes hand in hand with the fact that Airbnb has a global brand recognition and is available pretty much across the globe. So any travelers that may think of their travel accommodations going to any country may choose Airbnb as a simple alternative to trying to search local hotels in the area of travel. So basically, they have unlimited growth potential in terms of new users and demand over time. Now that we have a bit more context about the business highlights for Airbnb, let's actually dive into their financial highlights to see what's going on under the hood for Airbnb. Starting with their income statement, this is actually on page 116 of their prospectus in case you want to follow along at home, but this gives us information all the way back to 2015, giving us a nice global view of their financials over time. As stated earlier on in the video, we're seeing that revenues have indeed been climbing at a nice pace year over year up until 2019 when looking at the dollar figures themselves. With that said, I've also included the year over year growth percentage on this chart to see how the revenues have been growing on a percentage basis, and I'm not really loving what I'm seeing. Even though the company is growing their top line year over year, which is great, the growth momentum is slowing down once again on a year over year basis, and these are all pre-pandemic figures. Don't get me wrong, 30% year over year growth is fantastic over the 2018 to 2019 year. I'm just looking at it though from a more global standpoint of revenue growth that is tapering off a bit, and that's not necessarily something you want to see for a growth company. If the percentage growth figures were still declining, but they were going down maybe 2-3%, which still wouldn't be ideal, it wouldn't be as bad. But for Airbnb, we're saying 80 to 54%, 54 to 42, and then 42 to 32. And that's not considering 2019 to 2020, which is actually going to show negative revenue growth. Case in point, if we look at the revenues over the previous 3 quarters, we can see that without a doubt, the decline in bookings has heavily impacted Airbnb's top line. Now, the company has also significantly slashed down costs and expenses, which was definitely the right move to do during the pandemic, especially in sales and marketing. Nonetheless, the large cut in revenues over the previous 12 months have ravaged the bottom line at $489 million in losses from operations, which for a 9-month period is among the highest that Airbnb has ever seen, even when comparing this to a year-long period. This has definitely been an extremely difficult period for Airbnb, significantly impacting their top-line figures and impacting their momentum. Obviously, 2020 is not going to be a regular year for Airbnb's revenues, which for the first time is actually going to be declining over a calendar year, but it's going to be interesting to see how quickly the company can actually rebound post-pandemic, or even once there's a wider scale vaccine where more people are comfortable with traveling as a whole. Let's now take a look at their balance sheet figures. So starting with the total current assets as of September 30th, 2020, Airbnb had $7.212 billion in total current assets, and then $2.664 billion of which was in cash and cash equivalents. In contrast to this, $4.384 billion in total current liabilities, placing their current ratio at 1.64, which isn't the best, especially for a tech company, but is nonetheless manageable. Total assets and total liabilities are also somewhat fine on a ratio level. Now, the company has taken on significantly more debt over the course of 2020 that we can see right here, but nonetheless, even considering that added on debt, I'm not necessarily worried in terms of the company's balance sheet. So with everything that we just spoke about, let's now speak about the company's valuation, which as of right now is set to be around $30 billion at the time of the IPO. It's always difficult to value a company right out the gate, even during the IPO process, process where the company, as well as the underwriters of the stock that are bringing the company public, are going to issue out shares of the company at a certain price point, thus setting the initial valuation of the company. And once the company is in fact public and shares of the company are trading in the open market on stock exchanges, well, it's then at this point that the market can interpret data related to the company, and the company can be valued at the market price based on the market's perception. In Airbnb's case, though, it's somewhat difficult to accurately pinpoint comparative value, in that it's not really a travel hotel company, but then it's also not really a software as a service company or whatnot. It's more viewed as a disruptive tech innovation company, at least for the time being. As with other growth companies that aren't yet profitable, a multiple that I like to look at is the price to sales, or PS ratio. Now, obviously, since Airbnb hasn't yet gone public and doesn't necessarily have a price for their stock and the overall value of their company, we can't really look at an exact price to sales ratio. However, we can look at their trailing 12 months of revenues and compare this to other disruptive innovative tech firms, as well as their price valuation at IPO, which is around $30 billion. As of September 30th, 2020, the trailing 12 months of revenues was $3.625 billion, meaning that even at the company's IPO valuation of $30 billion, this places their price to sales ratio at 8.27x, which, to be honest, isn't terrible in contrast to, say, Uber right now, that's at 6.89, or even Booking.com at 9.45, which, by the way, though, is increasingly profitable year over year. But regardless, this is the IPO valuation for Airbnb, and for Airbnb's stock to, say, double after IPO, this just wouldn't make any logical sense in my view, based on lowered revenues as of right now over 2020 and an impacted business model from the pandemic. Now, I have read on other blogs and articles that some investors are valuing Airbnb at up to 20x price to sales, which in my opinion is a pretty rich valuation for what the company is as of right now in terms of their sales, as well as the fact that the revenues are increasingly slowing down over time and they have a limited revenue expansion model. With that said, though, the market is pretty irrational right now, and I feel like this IPO could go pretty much either way. If it does pop right out the gate, well, I wouldn't be surprised, but I don't think it will be sustainable due to everything that we just spoke about in today's video. I would sooner like to see this company trading at around the 20 billion total valuation range, but then again, that's around a 30% decrease in share price from the IPO price point, and I doubt that we'll be seeing that at least in the first couple of weeks of trading. Well, with everything that's going on around Airbnb from a negative standpoint right now as a result of the pandemic, who knows, maybe this will negatively impact investor outlook and the IPO won't do all that well over the coming months, at which point I do believe that this will be a really good opportunity to get in on the stock for once the company inevitably recovers over the long term, and I do very much think that this is going to be a company that will be thriving over the next 5 to 10 years. Once the pandemic does eventually come to an end and travel picks up again, the company should be able to refocus their efforts on marketing, at which point customer and revenue growth should once again resume. These are all factors that as potential investors we need to consider, both positive and negative, but then again, the market right now is pretty crazy, and it wouldn't surprise me if right out the gate we see a feeding frenzy for this stock driving up the price significantly. That wouldn't really surprise me. Regardless, I'm not going to be making a substantial position in the IPO. I do think it'll probably spike over the first week or so after IPO, and then after that, I think the stock price will probably trickle back down to a price point that's more reasonable, where at that point I will most likely get in for a longer term buy and hold. With all that said though, what are your thoughts on Airbnb? Do you think that the points that I made in this video were accurate? I'd love to know what you think about this company and whether or not you're going to be investing in their IPO. So make sure to let me know down in the comments, and while you're down there, if you enjoyed this video, take 2 seconds, drop a like, it really helps the channel out. And if you want to learn more about investing in general and hearing my thoughts about certain stocks, make sure to subscribe and hit the bell button to be notified whenever I release new and upcoming content. I try to post 2 to 3 times per week. So on that note, thanks a lot for watching today's video on Airbnb, and I'll see you in the next one.